Hello, 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 hello. What's going on, everybody? Welcome to our stock trades. How's everybody doing today, ladies and gentlemen? Very excited. Yesterday's live, if you haven't watched it, it's part one. It's not labeled part one because I never thought there will be a part one, but at least this is labeled part two. So if you're watching part two, this is part two, of course, right? You want to go ahead and make sure to watch part one, which it's literally the video I made yesterday. I recommend doing that because there's a lot of material that we need to talk about, okay? And welcome. What's going on, everybody? How's everybody doing today? It's a privilege and honor to have you here. Like always, this is an educational platform. Instead of using old, inundated textbooks that have old examples, we like to use real market data to create a business classroom that you would normally get at a college, but a lot better without the bullshit surrounded by college. And, of course, just really good collaborative content from people that are historically, have never been in a college classroom between, blue collar workers and what have you and whatnot. All right. So there it is, guys. From that perspective, let's move on here. I'm very excited to talk to you guys about the 2-year treasury. Again, there's going to be a couple things that we need to talk about, guys. A lot of macro that we need to discuss because that's important. So you could see the 2-year treasury literally after the jobs report came out, it dropped heavily. And it's almost like it's trading like a meme stock, right? And usually you don't really see treasuries act like this, only when the Federal Reserve, gets it wrong. If you don't recall, Federal Chairman Jerome Powell talked about how he believes the labor market and jobs market is strong. Well, obviously after this downward revision, that's actually not the case. And you can see here what's going on. So if you don't recall, I made a post about this about a couple, on Wednesday. And I said, I think Jerome Powell is making a mistake. Let me sip on some coffee. And by the way, get your beverage, relax, sit back. This is going to be a long video, okay? Just get your beverage, relax, sit back and learn. Ask questions. If you don't ask questions, you're doing it wrong, right? The chat room is open for people to ask questions. So, take advantage of this, right? So, all right, where do we start here, guys? So, let's go ahead and read this because I just did a really good write-up. In fact, shout out to Mr. Joshua Smith here. He is an entrepreneur, real estate and business broker, Triple L Realty out in Austin, Texas. Shout out to you, brother. I appreciate you, man. This is an excellent summary regarding the Fed's miscalculation. And it just, thank you for supporting the mission, right? Thank you for retweeting us. And it's an honor to be part of, the whole discussion here. Okay. So let's go ahead and read this. Because I just think I usually don't like to read off of my tweets, but I think it's just this one's good. All right. So the United States 2-year treasury yield collapsed by 27.1 basis points, which is like a 25 basis point cut, right, on Friday. And it closed at 3.68%, so 3.68% in what can only be described as a meme stock style move. This was a rare and aggressive drop for a bond of this maturity. The sharp decline followed by the release of the July non-farm payroll report, which showed that only 73,000 jobs were added, well below the expected 110,000. In addition to the miss, the data from the May and June was revised downward by a combined 258,000 jobs, which means the labor market was significantly overstated in the previous months. The unemployment rate also rose to 4.2% versus the expectation of 4.1%. This string of data sends a strong signal that the labor market is weakening despite what had been reported by the Federal Reserve on Wednesday, really. So, and also for Fed minutes and all the times they talk, right? So the current federal funds rate sits at 4.25 to 4.5%, right? With a midpoint of 4.375%, subtracting the 2-year treasury yields at 3.68% gives us the market implied cut of approximately 69.5 basis points. This rounds up, if you may, to 75 basis points, which translates to 325 basis point cuts or a potential 50 basis point cut followed by a 25 basis point cut. This is why the bond market, by the way, if you look at the poly market, which we talked about in part 1 of yesterday's video, I'm not going to talk about it again because that's just going to be wasting time. I did not talk about this since I posted this today. I recommend looking at the poly market because the betting market went from being hawkish, as they should have been with the Federal Reserve Chairman Jerome Powell, to essentially being dovish, saying, no, we're going to get a rate cut. And, you're at a risk of getting a recession if the Federal Reserve doesn't intervene, which we're going to go ahead and talk about the dual mandate of the Federal Reserve in the next couple of sentences. And by the way, just let me take a quick second for all the new subscribers out there, for Open Door, CLOV, all the stuff, all the things we cover, Tesla, Palantir, etc. All the people, United Healthcare, Humana, everyone who's basically following us. I just wanted to say thank you from the bottom of my heart. I appreciate you guys for supporting what we're trying to do here. We're trying to do a no bullshit, no hype, just pure, just educational, academic analysis of what's happening, right? I started from nothing and I realized that this information is not taught. So I decided to do something about it. And all of you guys that are here right now, you're all supporting this mission because everybody deserves to be able to learn how, Wall Street moves. Everyone needs to learn about, in my opinion, capitalism. And unfortunately, we are creating an era of people that hate capitalism, that are socialist. We're creating anti-capitalism, and it's a very dangerous notion. So I want to showcase these YouTube videos, and thank you for supporting the mission, because you see how fun this is, how we can sit down and talk about the market, project, and just have a really great academic discussion, which not even universities are having anymore. They used to, but unfortunately they've died, right? Independent thinking has unfortunately died. And universities now are breeding pencil pushers and unfortunately woke type of mentality that is not going to do well in the capitalistic markets. And institutions that are on Wall Street like Palantir have figured this out. So let's continue. This is the bond market's way of saying that the Federal Reserve is behind the curve once again. The Fed did not offer forward guidance at its last meeting and continued to assert the strength of the labor market. That stance has now been challenged by the hard data. The Federal Reserve has a dual mandate, which is to promote maximum employment and stable prices. With unemployment rising and job creation slowing, they are clearly failing on the employment side of the mandate. As a result, they are now being forced into a position where they will likely need to begin cutting rates soon. So what are the implications of this? Well, let's talk about it. From an educational perspective, based on first principles, this means interest rates will lower the returns on money market funds. So essentially, the return on a money market fund is going to go down. That reduction in yield incentivizes investors to seek out higher alpha returns somewhere else, most commonly through equities and real estate, which makes me believe that, housing and stock markets are going to go up. When rates drop, the discount rate used in valuations also drops, which increases the present value of future cash flows. This especially benefits high duration stocks such as small caps and specifically companies in the Russell 2000 index. Historically, these are the first to respond when rate environment turns dovish. As interest rates fall, it is also likely that the Federal Reserve will follow up on quantitative easing to further stimulate the economy. Lastly, and I'm going to put it here so you can see the bottom graph here, what most people are missing is the scale of investments currently following into the United States. Trillions of dollars are being deployed through strategic initiatives originating from the United States government. The European Union and Japan just signed a deal. These are direct capital injections into infrastructure, manufacturing, and energy. When you combine, and of course, the 15% tariff, when you combine that stimulus with falling interest rates, the environment, the results is a high probability setup for equity and real estate markets to break to all-time new high. And again, this is an educational platform. Nothing we say here constitutes financial advice. I recommend people commenting on this. If you don't agree with me, challenge my assumptions, challenge my opinion, and use hard facts and data. Try to learn how to think for yourself. Right? This is the goal of this platform, is to help you critically think for yourself, because at the end of the day, I'm not going to be there when you're at the bottom of whatever storm that life throws at you. It's going to be you and your family, right? So use this as a way to exercise your mind, structure your mind, to be able to think for yourself, because unfortunately, no one's going to be there when the times are tough. Okay. Now, of course, we have a platform that have a supportive nature, but it's still at the end of the day, you're going to have to get into the eye of the storm. And to do that, you have to think for yourself. Lastly, the key is understanding the forces at work. Investors who take time to learn about how macroeconomics affect the market are going to be well positioned to allocate capital in the next phase of this new cycle. What new cycle? The interest rate cutting cycle. Okay. So we went ahead and talked about this. I think we beat this on the head. Very good. And unfortunately, only 591 people saw this, right? And it's okay, right? Because at the end of the day, people follow flashy things, meme stocks, and whatever. People don't like hard analysis, but it is what it is. We're going to continue doing what we're doing, and the results are going to ultimately speak for themselves. You make micro improvements every day in your life, and ultimately it will compound. Just like what Bill Ackman was saying in regards to COVID, how it compounds in terms of those, you improve yourself every single day by 0.01%. Ultimately, in the next 5 years, you're not going to recognize who you are anymore. You're going to be a completely different person. You're going to be a completely different beast. And it's basically how you surround yourself, the people that you surround yourself with. Do you surround yourself with winners, or do you surround yourself with losers? Okay, let's go ahead and take a look at the comment sections real quick here. Take a little break. Yeah, I know. It definitely will be wild. Absolutely. I agree with you, Shinitsky here. Okay, what's going on? Hey. The rate was even higher during some of the Biden terms, and there was still more job growth than under Trump. There it is. Close to the, okay, yeah, there's B-Rob's in the house. Cutting rates is just a Band-Aid fix for Trump's tariffs, hurting small business and AI taking jobs. I agree with you. I just made a post regarding AI taking jobs, and it's unfortunate. The writing skills improvement program just lost, because ChatGPT replaced them, but they did not replace the human connection, which is unfortunate. Let me see. So BSTLO60HUAT question is, isn't UNH a better and safer buy for investors than CLOV? Listen, I am not a financial advisor. I cannot give you recommendations to buy and sell any security. Our platform is not registered with the Securities and Exchange Commission. The only thing I could recommend you on is being able to get to a financial advisor, contacting them and being able to ask them this question, but also being able to look at the information yourself, take in the data from a first principles perspective, learn and understand the data. What is the medical cost ratio? What is revenue? What is net income? What is free cash flow? Ultimately, that's what the mission of this platform is all about, is being able to have you critically think for yourself, not being able to be spoon-fed. That's what the government wants you to be. The government wants you to be spoon-fed. People that like to scam you, that like to take advantage of you, they want you to be spoon-fed. They don't want you to be educated to be able to think for yourself. So my recommendation is you should be able to answer that question, and you should learn on where to get the information to be able to answer that question. And you should verify that whatever assumption that you have with hard data facts. Be able to think for yourself, okay? Right? Because I understand it's an honest question. There's a lot of YouTubers out there that try to answer these questions, but this is not the approach we take. We like to take the approach to have you think for yourself, right? That is the goal of the platform. We present the data and you come to your own conclusions. And if you don't know how to do that, you learn. And if you don't know how to do that, you go seek the first thing you should do is seek out a financial advisor. Okay. So there it is. CLOV pumping after earnings. Thoughts on Jerome Powell resigning this year? The other person resigned. Crump, you brought a really good thought in my mind. Two of the folks in the Federal Reserve that were appointed by Donald Trump rescinded federal chairman's decisions amongst the other federal committee members. It's interesting because I have never seen a rescindance, which shows that there is some form of a division happening within the Federal Reserve. This is not good, in my opinion. I would rather have the Federal Reserve apolitical, but it's been hard to argue this, guys. We need to make sure our Federal Reserve is independent of that of politics. But at the end of the day, Federal Chairman Jerome Powell does vote at the end of the day, right? All these members end up voting. And how much they separate that, I don't know. That's so funny. What Powell is by far the smartest Fed. No, I mean, what he's done with the soft landing, incredible. And we have to give credit when credit's due. Remember, they had 2 descendants on the board, first time since the 90s. Absolutely, Clark just mentioned it. They had 2 descendants on the board the first time since the 90s. Guys, this is really interesting. We're approaching some really weird times, and I wouldn't really be scared of the 90s so much than now, because the American people are divided. But the beautiful part about our platform is we have Republicans and Democrats holding hands together for a simple common purpose, and that is financial education. The only time that doesn't happen is in the political channel where they destroy each other, which is fine. I enjoy it. I'm in the middle. I'm always putting fire on both sides, right? Today I put fire on Trump, right? I post that Titanic a little meme. If Donald Trump was the captain of the Titanic. I should read it to you guys. It's kind of funny, right? A bag of clovers. This is why I love this channel. Great response out. Thank you, Ray. I appreciate you. We're honest here, right? There is no scammy. There's a lot of bullshit out there, right? And the beautiful part about medical school is that we're not salesmen, right? When we speak to a patient, we offer them the risks and benefits. Obviously, I can't do the risks and benefits of a stock because I'm not a licensed investment advisor. But when, as I'm in my medical training, and I'm soon going to be an MD, I'm going to be speaking to patients and talking to them about procedures that are invasive. And I'm going to tell them about the risks and benefits. I'm sure B-Rob, you remember, I'm sure your surgeon talked to you about that, right? I only disclosed your surgeon because you've disclosed it before on the channel, right? And, you at the end of the day, we're not salesmen. If you want a second opinion, go get a second opinion, because I don't own your body. You own your body, just like how I don't own your portfolio, right? You are the captain of your own ship, right? And if there's one thing that this channel can teach you is to be able to think for yourself. All these other YouTubers out there, what they like you to do is they like you to feed you the information to keep you dependent. I don't like to do that. I want you to be able to learn for yourself to where you can question me, right? You can say, Al, I don't agree with you. Put it in the chat. Come online. Let's have a debate, right? That's where we should be at, okay? All right, you may not like Powell because he's not lowering rates. No. I agree. I think Powell's done a great job, and I think he's going to be a case study. I tell you, right? UNH has been on top of the mountains for a long time. There's a new sheriff in town, right? Sheriff B-Rob, right? I thought somebody else. When do we moon? Oh, I don't know about that, right? Yeah. If you look at the papers you signed before surgery, you may read. I know you see it, right? We're honest. We tell you the good and we tell you the bad. And if you read the bad, you're like, oh my God. Even though the risk is low, we have to be honest, right? Because the needs of the patient come first. And guess what I did? The needs of my subscribers come first, right? I want to be able to have a place where when you guys come in here, you know that whatever I'm telling you is something that I tell Michelle, something I tell my, the love of my life, right? This is the community that I want to build, right? There's no bullshit here. There's a lot of people out there that bullshit people, right? This is a place that I want to be formally academic and educational, right? Michelle just jumped out to me and she said, honesty and communication. And that's it. That's the pillar of our relationship, right? All right. My body, my choice. Exactly, right? My comment was towards a comment, not you, Al. Oh, no, I know that. I know that. I know you understand Powell is doing an amazing despite. Oh, no. I'm just agreeing with you. Yeah, of course. Yeah. It's a discussion, right? Okay. So, I have some coffee, guys, but damn, dude, my throat's dry. All that talking. Damn, 20 minutes of talking. Jesus. All right. Oh, Humana. Yes. Okay. So we're going to take a quick 2-minute break, less than 2 minutes. I'm going to go get some water here. And then we're going to go ahead and talk about this section here. Damn, this is going to be a long live, guys. Okay. So let's go ahead and let's put this music here, and then we will be back in less than 2 minutes. All right, guys, we're back. All right, sorry about that. Again, I got to pace myself so I don't burn out, right? Okay, so we can continue having really good analysis, right? Because we don't want to take any shortcuts here. So we're gonna probably take some shortcuts for me, just because it's a lot of lives. Okay, it's just a lot of information. I mean, look at all this. Look at all this information. I mean, just look at oh my, there's a lot. So okay, so. Damn, I'm awake. All right, let's see here. Boom, 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 boom. Bass is good on the Bose headset. Oh, hell yeah. I like that you enjoy it. Excellent, excellent. Only 11 likes with 50 viewers. Yeah, man. If you guys like it, it helps with the YouTube algorithm and helps support the mission. If not, I totally understand. You know what I mean? Sometimes people are not logged in and it takes a long time, so I get it. I always smash the like button. I appreciate you guys. Means a lot. Means a lot. All right. So shout out to Market Cap. God bless you guys. Shout out to Rapella. Shout out to all of you folks here on Twitter here. All you amazing people that are doing really good work here, trying to do financial education. So you could go ahead and read this. This is my analysis here. Maybe I should read it because this is a pretty, again, long story short, there is some speculation in regards to actually, you know what? First, let's listen to it, and then we'll talk. Let's do that. Let me remove this. Let me remove this and share a audio version of the screen. Make sure we are good here. Okay, and then we're gonna go here. And then I'm gonna increase the volume, and I want you to let me know, guys. Please let me know if you can hear this.
During Investor Day, we shared that we were focused on transforming the organization to enable scalable growth and drive operating leverage.
So you guys hear that? You guys hear that? Let me know if you guys hear that before, good. All right, good. So now that you guys hear that, what is this? This was the earnings call that just happened literally this week for Humana Q2 2025. And there, word on the street or the retail street is suggesting that potentially they may be referencing Counterpart Health without actually referencing it. And in fact, B-Rad Cooley ended up looking at subdomains specifically for Humana, not Counterpart. And he found a connection between Humana and Counterpart, which is interesting. This shows you equivocal proof that there's some form of a connection. And they don't mention it here, so it's still speculative, but let's go ahead and listen and let's figure out what's going on.
During Investor Day, we shared that we were focused on transforming the organization to enable scalable growth. And
so they went ahead and they mentioned this actually during Investor Day. And if you don't recall, Investor Day is when they started talking about medication adherence and all these other things. It almost looked like a Clover Health white paper, which is quite weird. You know what I mean? So, that's actually really weird, guys. And if this pans out, I can only imagine what's going to happen, right? This will be very fun. I mean, I'm curious. Again, I'm a spectator like you all, and I'm just taking all this information, synthesizing it, and just giving you my opinion. But it's quite interesting to see kind of what's going on here. Let's listen on.
The organization to enable scalable growth and drive operating leverage. This is a multi-year transformation, and it will include both near-term tactical cost programs, but also longer-term efforts that change how we operate through increased automation and use of technology. I really want to emphasize that while these changes
increase automation and use of technology, you see how they're switching into a technology-centric company, which is quite interesting. I find that very interesting, ladies and gentlemen, because they're in a health insurance company. How you doing, beautiful? How you doing? Let me kiss my dog first. Sorry about it. He just came today, so he just came today. Automation and technology, right? And it's quite interesting. They don't really talk about this before. This is something new, and all of a sudden we see this connection with Counterpart, which is a technology company. Very interesting. Very, very, very interesting. And then we have, JB Scott, he said, don't forget about the HUM VP who wanted to talk about the demo and got shut down. We're seeing all these connections. Again, Luke, we do not offer any buy-sell recommendations. Whoever tells you that is scamming you. Our recommendation is consult a financial advisor. We are a financial educational platform that has access to over 2.5 billion outputs of institutionally graded data, right? Whoever tells you buy and sell on YouTube is a scammer and they want to scam you, right? All right. So community is a feeling of fellowship with others as a result of sharing common attitude, interest, and goals. That is what we have in Al's Discord, and that's the beautiful part. And God, was it hard to create this? It certainly is, because it's so easy to just kind of have something jumbled. But if we really all come together, when all shareholders are like literally aligned, not shareholders in terms of equities, but just people that invest in the mission, which is to democratize financial education, we really get somewhere, right? But yeah, I agree with you, JB Prescott here. I agree with you, man. This is quite interesting. I'm very excited. It's almost like having a birthday every 3 months. We have earnings, and now we have a birthday with Humana. So now that's 4 more birthdays. So that's like 12 birthdays in a year, plus your birthday and maybe your wife's birthday and maybe her birthday month, right? So that's amazing. Okay. So let's continue.
Changes will reduce cost. The intent is to enable our broader strategy. This will be a multi-year transformation. It will be taken at a measured pace.
Multi-year transformation. Sounds like a multi-year deal might be signed with Counterpart. Again, all speculation until we see that documentation, right? But there are breadcrumbs, as what JW is saying. They look like there are breadcrumbs, right? But again, just to be on the defensive side, speculation until we get a press release. Okay? All right, let's see.
And the objective is to create a more nimble, technology-enabled organization that can respond more quickly to consumer needs and expectations.
So what is the word nimble? What is the definition of the word nimble? I like the word nimble. It's a pretty good definition. It's a quick and light in movement or action or agile. And for example, V28 literally destroyed UnitedHealthcare's business model, and they have to restructure everything. Versus what Counterpart and Clover have done is, and this is basically what Andrew Toy has stated, he's able to tackle the futures of whatever health changes that centers of Medicare and Medicaid do, given the interoperability goal that they have, right? So now we're starting to see, the CEO of Humana almost sound like Andrew Toy, which is quite interesting. Really just amazing leadership. Again, not proven yet, but it's just so interesting to see these breadcrumbs and follow these breadcrumbs, okay?
In the next few months, we will also be expanding our efforts to contract out additional aspects of our shared services functions. We are doing this in an effort to streamline and optimize outsourcing capabilities. We have made
outsourcing of what? Outsourcing of what capabilities? Contracting of what? He said in the next few months we will be contracting. Contracting what? Could it be that in the next few months, maybe Clover's going to release something that potentially might be a contract between Humana and the subsidiary Counterpart Health? I don't know, but outsourcing, right? You see this word? I'm loving this too. Again, these are not my words. These are the words of the CEO of Humana. Okay. So let's dissect this a little more, right? Because a life not examined is not a life worth living. So, okay. In Q1 2025, Andrew Toy answered the question. Someone asked him, when, I think it was the analysts, even the analysts are like edging on SaaS. The analyst said, when are you going to give us SaaS numbers, bro? Right? And what Andrew Toy said is our job right now is we should honestly replay it using the earnings analysis terminal that we have. In fact, why don't we just pause right now, stop the sharing of the screen, and let's analyze this. So let's go ahead, go here. We go to alstocktrades.com. We go to the earnings transcript terminal. Open up full screen. Zoom in a little bit because I can't see. We're going to type in CLOV. We're going to go ahead and do... it'll be interesting to see kind of how this updates, honestly. But it really has on... Let me see something. Isn't Apple kind of... What company updates on the fiscal year basis here? Let me see something. Is that what you got? I don't know. Okay. Yeah, that's fine. I'm just seeing something here. Okay, so let's look at Q1. Okay, this is the earnings transcripts for Clover. I'm curious to see. I think it did update in a way. I need to see this to see kind of how this figures itself out, because it'll be interesting to see how this works in terms of updating. Okay, so it updated. Q2 is obviously not here. There's no transcript available. I'm curious to see if Alignment Healthcare reported its transcripts. Amazing. So Alignment Healthcare reports its transcripts. Its transcript is here for folks that want to understand. And then for folks that have added on the AI Access add-on, you can have that analysis as well. But let's go to CLOV for a sec. And this is all part of the Al Stock Trades advanced terminal here. Let's go ahead and see. And did someone say SaaS? Let's just see if someone asked for it. SAAS? No. That's fine. We can go here. So that's the operator, Ryan Schmidt, Andrew Toy. They talk. Peter, CFO talks. Andrew Toy, operator. Okay, so here it is, Jonathan Young. So let's zoom in on here and let's look at John. And then we're going to be talking about other things too. It'll be interesting. Some findings I found over the night here. Let's see. Okay, so this is kind of. Oh, here it is. There it is. Are you ready for it? This is what it says. All part of the Al Stock Trades terminal here. So Jonathan Young says, okay. And then we didn't hear much on Counterpart Health here. Just any color on how that go-to market strategy is progressing? If there's been any more bigger wins, and kind of as we look ahead, when can we start seeing contribution? Thanks. Andrew Toy jumps in really quickly and says, yes. Hey, Jonathan, it's Andrew. Yes, definitely. We remain excited about the Counterpart business, and we are looking to provide more updates on that as we grow up throughout the year. We remind everybody that we are not necessarily intending to make announcements about every single deal that we make around there. So they want to remind everybody, they're not intending to make announcements on every deal. However, we remain excited about it. That's a little simple. That's a little read between the lines. We remain excited about it. Then he says, now watch this. And he talks about start seeing contribution. So he's answering the contribution side. In my humble opinion, what does he mean by contribution? Again, not financial advice, just my humble opinion here. I think he's talking about, free cash flow, net income, and all the other things. Revenue, EBITDA, right? So all contributions, and Andrew Toy understands this language, all contributions, revenue, I think this means EBITDA, right? I think right here, will of course be in the consolidated financials as well. And we're going to be talking more about that as we proceed in that quarter. But right now, we're very focused on making sure that we improve profitability in the insurance segment. So what does this mean? I think that what he's trying to say is, hey, as he stated here, we're not going to talk about Counterpart until we become profitable. And I believe, and again, don't quote me on this, not financial advice. Again, guys, education here. I like to use real market data to learn about this, because a lot of people out there it's easier to use real market data than a textbook, because we can learn in real time, right? And it's really cool because we don't know the truth right now until Andrew knows the truth, right? He's already in Q3, right? But we don't know the truth, and it's really cool because then we can learn the truth together. We can use the scientific method, hypothesize, strategize, and I can hear all of your hypothesis, use the scientific method. Yeah, right? And we can all come together and see and test their scientific method by waiting for the earnings report. So this is going to be my hypothesis. Are you ready for this? And I want to see your hypothesis. I hypothesize based off of the data that I've seen that they're going to have to revise statements upwards. They're going to revise in Q2 2025 on Tuesday. They're going to say, we revise upwards on X, Y, and Z. Okay. And that's going to be amazing, right? I really think they're going to revise upwards. And I think they're going to, Q2 is going to be a profitable quarter. Now, what I don't know and what I'm hoping for is that they're profitable this year on a fiscal year basis. I don't know if they're going to be able to do that, but if they're able to tell us, holy freaking moly, okay? Then after they do that, then I'm sure, they could maybe potentially talk about the counterpart, which goes back to what Humana CEO was saying in the next few months, okay? Let me look at what Matt Hewitt was saying here. Let me see what he's saying. Let's see let me see here. Yeah, so this is very exciting, guys. All right, so let's just, now that we went ahead and talked about this, very quickly, I just want to take another tangent. I know it's so many tangents. I just need you to look at this. Okay, if you look at AMC, I know this is not an AMC video. I really want to just show you this. If you look at AMC and if you look at quarter number 2. Yeah, quarter number 2. This is, if you look at AMC is the movie theater business, okay? And if we control and exit and do control F and type in 85%, was it? Yes. Yes. Okay. Then we go up here and we enter the full screen mode and we go down here. I want you to read this with me. Please read this with me. If you don't read this, then you're missing the mission of the platform. If I can freaking find it. Hold on, let me see. All right, here it is. I need you to read this for me. Okay. I'm going to see if I can highlight it. There. I just want us to read this. Adam Aron, he's the CEO of AMC. On specifically, let me give you the date because I recorded the date so you guys can see the date so you know how Wall Street is. On November 8th, 2021, Q2 2021 earnings, Adam Aron specifically stated, he said this is his words, his transcripts. 2 months ago, more than 85% of my net worth was in AMC stock, and proper estate planning for a 67-year-old suggests I should diversify my assets a bit. But I don't want any of you ever to think that I've anything but full confidence in AMC's future. So I will do so under the auspices of the parameters of what's called a 10b5-1 plan, right? For folks that don't know what this is a, let's see here. So this is, this is not correct. No, this one, 10b5 plan. This is okay. I don't think it copied the right plan. I got to make sure if it did. It's a pre-approved insider trading offering legal defensive scheduled trades. It permits corporate insiders, officers, directors, greater than 10% shareholders to establish a written trading plan when not aware of material non-public information. It provides an affirmative defense, right? So essentially, so that's what he's saying, right? So where I pass off all this year's trading control of the shares that I own or is granted to an independent third-party bank based on parameters of the plan that I only partially set. So what he's saying is, so he's saying that he's pretty much going to give another bank, which is Wall Street, the people that we are trying, the people that I fight against, right? Because, they've screwed over retail investors and people like us, right? And he said that I'm not going to make any decisions. This independent third-party bank is, which is part of Wall Street. Okay. But don't worry. I have anything but the full confidence in AMC. So when was this done? When was this earnings? I'm going to remind you. I said it early. I said it November 8th, 2021. So let's go here, and then we'll go back to Humana. What was the stock price of AMC on approximately November 8th, 2021? Let's zoom in on here, and let's go all the way to where there was a spike, of course, because greed is real. The devil is real. Here's November. And I don't know which one do you want. November 8th was on the weekend or whatever. November 8th was weird. It's not on the weekend, but you can't see it here. But you could see the stock price was $183.97. Obviously, there was some dilution involved here with reverse stock splits and all this bullshit. But look, he pretty much had his third-party bank sell out on AMC. And since then, the stock price is down 98.45%. It's down $181.12. This is why I beg you that you need to think for yourself. This is why I tell you that, this guy, he hangs around with actors. He's in the movie theater business. You type in his name, see what he put as. He put himself as a, CEO of AMC. Watch, look what shows up. That baboon little meme that he created, right? And then if you go to his Twitter, it says, the little baboon silverback CEO. He used this as a way to essentially be able to dilute all the mismanagement onto shareholders. And those retail investors, I really feel for them. So that's why we don't say buy, sell. First off, that's illegal. That's disrespectful to the SEC, and it's disrespectful to the state in which I reside in, right? And it's disrespectful to the state in which you reside in. We follow the rules, and on top of it, we go ahead and we ask you to think for yourself. People out there that were nefarious, that were asking, especially on YouTube, asking people to continue to buy AMC without understanding the fundamentals. Those people are really, there's a special place for them in hell, right? But again, this is why data is important. That's why data is important, right? Because if you go to the financial data and analytics metrics chart and you type in AMC in 2021, look what their net income was. Negative 1.2 billion. Look at their free cash flow. Negative 714 million. Look at the quarterly for Q1 for 2020. Look at the extended history. Let's look at net income, free cash flow. This is 2021 when he was talking about it. Look at all this. Look at all that, right? So it's unfortunate, guys. Okay, just can they turn themselves around? We'll see. But at the end of the day, he sold out a lot. All right. Again, so let's go back to what we're saying regarding Counterpart and Humana, right? But I just wanted to take a moment because I found this yesterday as I was looking around, and I was just like, man, I really got to share this with you guys. So don't trust anybody, even question everything I say. Don't trust me, right? Question everything I say. Everything I say, question it, right? Don't trust anybody. Okay, so now let's go ahead and listen to this. Let me share the screen here for the audio. I hate that I had to do this, but it's just kind of the way the system is structured. Okay, very quickly, scheduled, diversifying my assets. Yeah, it's laughable. My wife did speech pathology for years. It takes a certain type of person to go into homes. Some are shit shows. selling and buying plan. Oh yeah, he knew it was overvalued. He got a nice under the table cut to do it. AA diluted the hell out of the stock. It was absolutely sickening to watch. Just keep holding. I believe in it, right? Oh, I know exactly, right? Toy and the other CLOV leaders have large bonuses. Yeah, we'll see. Exactly. It'll be interesting to see if that still plays. I like your hypothesis there. Absolutely incredible. Adam Aaron still CEO. Absolutely. I agree. All right. The board didn't fire him because why would they? He's saving the company on the backs of retail investors, right? All right. So let's continue. Let's restart a little bit and then let's continue.
Optimize outsourcing capabilities. We have made really good operational progress. We genuinely feel good about it, and you will see the underlying metric performance. You will see improvement in the underlying metric performance.
But we are spending that $100 million where we think we can really drive a return and accelerate some of our trends.
So he pretty much said, let me just repeat it again because I just want to repeat this again because this is going to be important.
Metric performance.
But we are spending that.
You will see the genuinely feel good about it, and you will see the underlying metric performance. You will see improvement in the underlying metric performance.
So he pretty much says we're going to save a lot of money, right? We're going to see underlying improvement in the metric performance, right? And then she says that we're going to be spending $100 million. Could it be $100 million a year? That might be counterpart on top of maybe like if I was counterpart, what I would do again, I'm not, right? I can't speak on them on their behalf, but I'm okay with a 20% shared savings plan. But if what counterpart can do is they might say, hey, give us $100 million to use the product plus 20% shared savings plan. I don't know. I'm just speculating. It's that's pure speculation. I don't think it's 100 million. I think because they basically have value-based care jobs that they hired. And I don't know if that's part of the 100 million they're talking about and they kind of umbrella it together. So maybe you might, Clover might get 50 or I don't know. So let's continue.
But we are spending that $100 million where we think we can really drive a return and accelerate some of our transformation work and potential upside. It is an incremental $100 million. We see a lot of opportunity.
So what does the word incremental mean, right? Incremental. Incremental is relating to or denoting an increase or addition, especially one of serious on a fixed scale. So maybe $100 million a year, if that's what it means. I'm going to just speak to AI here for a sec. When someone says, I'm going to spend $100 million incrementally, does that mean they're going to continuously do it year over year? What does that mean? Please give me an answer in less than 30 words. I'm curious. You can see the answer here. Let's see. It means they'll spend $100 million in smaller amounts over time, not all at once. Oh, so maybe it's just $100 million in total. I don't know. Maybe that's the transformation they're talking about, right? It's funny how they're transforming themselves. And we talked about this yesterday here in regards to the net income to revenue to net income. And right now, Clover is ahead of Humana when it comes to that. And that's just with 3.5 stars from last year, let alone what's going to happen to this next quarter. It'll be interesting to see that. And I'm actually really impressed because if they end up transforming themselves, then they might outcompete United and they might actually offset United, and Humana might be the next giant. And it's because of Counterpart. And then others will start to follow, which is insane. This is so crazy, guys. Right? Wow. I mean, again, I don't know. Like, why doesn't other people make their own? But look at United. Optum is not working. In fact, somebody from Optum, if you go here, look at Optum, Clover Health, and you look at here. Didn't they just hire someone from Optum? Again, I can't seem to find the newsletter. Let's ask. So Clover Health recently announced that they hired somebody who had Optum experience from United Healthcare. Can you please find me the newsletter article that says this? I know there's some misspelling in there, but it should catch it. Oh, you couldn't find it? Yeah, I know that's BS. That's fine. I know where to get the answer. So sometimes you just have to know where to get the answer from. So to get the answer, we have to go to Conrad. What's his name? What? Conrad is his name? There. Oh, thank you, man. Vicky Berner. Yeah. Oh, man. I appreciate you, man. Oh, there you go. Wow. Well, hello, hello. All right. So, Vicky. Oh, look at this. Hello, hello, hello. All right. So, hey, look at that. All right. Look at this. Damn, this lady means business. All right. So, Counterpart Health. Let's go. All right. So this is Vicky. This looks like an AI picture, but it's okay. Um, and healthcare technology leader. Yes, she is. You are a leader. Value-based care. I have a mutual connection. Okay, excellent. All right. I don't know where I met you, but I met you somewhere. All right. I don't know this girl. I don't know this lady. Okay, so let's read what they said here. And let's see this. Okay, there it is. Counterpart, 2 months. Okay. She worked 4 years, vice president of Optum Care Networks. So is that same as Optum for United, or am I missing up on this? Is this the same thing? Or am I missing this? Oh, you already here. So wait, is this Optum or is this something else? Somebody help me. Ah, subsidiary of United. Excellent. Okay, good. So I just want to make sure, because again, it's Optum is a part of United Healthcare Group. Excellent. We got it. But again, again, guys, I just want to make sure we are. I have somebody that works here. We got 2 people that work here. Oh, one's from Tucson. Hey, nice. That's good. I just want to make sure we're good, guys. Because I just want to make sure I fact check everything. Thank you, guys. I rely a lot on you guys. Okay, so vice president here. So she was. Holy crap! She was the vice president of Optum. Holy freaking crap, guys! That's huge. She's the vice president of Optum. Oh my God, Clove to retirement. Just wait until she sees how many Clover shares you have. Right? You got this, man. I believe in you. You got this. You got this, big dog. Right? You got it. Right? Oh man. All right. Oh, I gotta celebrate for you too. We're so glad to have you join the team. Vicky. Oh my God. Vicky. Let me look up. Let me look more into this lady. This is actually huge. Vicky. Oh my Lord. This is good, guys. This is very bullish. Okay, I'm very excited. I'm very excited to see this. They literally took her from United. She was the vice president. Are you serious? That's crazy. Holy, actually, I want to see. Oh man, and you know what's funny? United Healthcare, they can't they can't bend the knee to Clover because they have Optum. It'll make Optum go down unless they quit Optum and use Clover. Because if they don't, they're gonna die. Humana's about to kick their ass, right? Specifically, whatchamacallit, what have you, whatchamacallit, Humana against the United with their potential transformation. I'm curious to see who are these people. Imagine all the connections this lady has amongst all these healthcare providers. All these doctors that this is great. And it's a woman in power. Hell yeah, baby. Hell yeah. You do you thing, you do your thing, man. Hell yeah. Senior vice president of Optum. Hey man, looks like Mr. Gullick here wants to join Counterpart. Hey, come on over. Forget Optum, bro. Right? Come on over. Look at this. Optum Care Network, Washington. I don't know, man. You want to come join Mr. Fish? All right, we'll see here. A lot of these people have connections with secondary connections. Healthcare is small. Bright here, Director of Finance. I'm telling you guys, Counterpart is we're starting to do it, guys. I don't know. This is the Chief of Staff of Counterpart. Love it. Let me go here. Excelente. Okay, so let's continue. There's Mr. Conrad. There you go. There you go. Yeah, so we'll look at this more often. But yeah, so this is very good. Did we read this yet? I am beyond excited to share that I've joined the incredible team at Counterpart Health as Vice President of Operations. Counterpart Assistant is a truly unique product, and I feel privileged to be part of something so meaningful. Counterpart Assistant is revolutionizing the way primary care providers identify and manage chronic disease. Using a powerful combination of AI and advanced data interoperability, knowing that this platform is making a real difference for both patients and healthcare professionals is inspiring. Please say physicians too, right? And I'm thrilled to contribute to a solution that's changing the landscape of healthcare for the better. Excellent. Excellent. Very good. Again, guys, I wasn't going to talk about this, but hey, I have to, because, this is important. It's Vicky. It's Vicky Bruner, right? We got Bruner in the house, right? Right. So I'm happy I'm happy. This is great. Oh yeah, I'm just going to steal this little thing here. I'm going to put this right here for me. I'm going to take the little tab out here. And then now let's go back to the earnings for United. And let's listen in. I'm sorry, earnings for Humana. And let's keep listening.
Opportunity to invest across the business, really focusing on our transformation. We have incremental investments in some of our member retention work, AI, general operational efficiencies.
AI.
A little bit on stars where we're seeing high performance.
You've heard Jim and Celeste talk about that we're investing in, are investing very much in the member experience itself. And so the activities that we're taking in stars, yes, they improve health outcomes and they improve our stars, but the reason for that is predominantly because we're also improving the member experience, making sure that our members are getting the care that they need. And ultimately, what they're looking for is that they can get the care they need, that they are being proactively outreached to get care that's appropriate for them, and also doing so in a way that is affordable. And we believe that
into account in our stars calculations, and do we still feel good about our overall stars performance and the direction that it's headed, even when you account for this? And the answer to that is yes. We're certainly taking it into account. And even when you think about some of that member abrasion that comes from reduced benefits, we feel good about the direction we're headed in. We feel good about the trajectory for BY28.
Excellent. All right. So now we're going to stop the sharing of the screen so we can show the normal screen here. So there it is. So now that we talked about this, we did all this, I recommend following us on Twitter. If you haven't done so, there's some good stuff there. So now let's go ahead and shift gears to Oracle, Oracle Health, Clover Health, Oracle Health, Clover Health. We're going to make another video in regards to this, but I think let me think. If I was to condense down, because we're going to make another dedicated video on this, because I think this deserves a dedicated video. So, because it is big, it's a big deal. And I want to look at the financials for Oracle specifically. I want to know the revenues and overall of Oracle, specifically Cerner, right? Oracle Health, Clover Health, Cerner subsidiary of Oracle. counterpart. It's a subsidiary of Clover Health. Oracle Health, Clover Health. Oracle Health bought Cerner. Clover Health created counterpart. Oracle Health, Clover Health. Are you seeing what I'm saying here? Right? Right. And again, I'm only making this connection because I'm not smart. I'm not smart. I'm trust me, guys. I'm nothing. Right. But this sexy looking dude here, he's smart. Right. So let's see what he said. What did he say? If I can find, he said I'm going to put in a Kentucky accent. He says, life moves pretty fast. If you don't stop and look around once in a while, you could miss it. Then here you say, miss what? The Oracle re-rating story 2022. What happened? Well, I talked about it here. Vivek's repost of Oracle's 2022 transformation is not random. It's a message to investors and the industry. Clover and Counterpart are quietly building the same kind of transformation Oracle paid $28 billion for, only with more agility, better AI integration, and a native tech foundation. The market just hasn't priced it in yet. Not financial advice, just my hypothesis, and we'll see how the market tests the hypothesis from a first principled academic, educational, scientific perspective. We'll see. Okay. All right. So drop the mic, stop the stream. Why? That's it. Leave. Oh, that's it. Okay. That's it, guys. Bye-bye. I'm done. All right. You know what? I'm done. See you guys. I'm kidding. Okay. Oh man, we got so many things. We got I know that was like a mic drop, honestly, right there. That was only 661 views, right? Please don't make it 666. Don't give me that number, right? All right. So there's that. Oh, yes, United Healthcare. So we have so much to talk about, guys. Oh my gosh. All right, so let me remove Vicky. No more Vicky. Okay, we have to remain focused. Okay, we have to remain focused, brothers. Okay, remain focused on the task and mission. Don't get distracted. Okay, focus, my brothers. All right, so Twitter. So as you can see here, yes. So it's funny because this guy, when he comments, it's almost he could say the nicest thing, but it comes off sarcastic because of his emoji. Like he could say, I really like your post. It's like, you could say the same thing. Oh, and it'll just be like, looks like sarcastic. All right. So I find this really funny. While reviewing institutional data through the analytics software I developed, I came across something noteworthy. In Q1 2023, United Healthcare Group reported approximately the SEC filings reported 877 million shares held by institutions via the SEC 13F filings. Fast forward to Q1 2025, and that number appears to have declined to around 795 million, indicating a net reduction of roughly 82 million shares over the past 2 years. Given the growing interest from retail participants during that time, is it possible that some of the institutional selling may have been absorbed and bought by retail investors? This observation comes directly from tools within the software. So you can see here, this is part of the ALHC stock trades lifetime access. We removed, this was in part 1 of the video. We removed the subscription. It's all lifetime access now to further solidify that we are an educational platform bound by data. For folks that are interested, we do have a coupon code SAS, SAAS, you can use at checkout at alstocktrades.com. Please use SAS because then you'll get $1,200 off. One-time payment, lifetime access. Okay, take advantage of this. I can't promise you anything, but what I can say is you're going to be more confident in understanding financial education, right? And you can speak to lifetime access members, right? So there it is. So interesting with United Healthcare, the number of shares dropped just precipitously. Just look at those shares. Like if you look at zoom in here and look at United Healthcare, right? And what's going on in the chat, guys? What's going on? I can't do the Pacific time. No mo, right? 30 minutes maybe in, right? Right. So just look at United Healthcare, guys. 800 look at those shares and they drop below the SMA here. So I don't know, guys. Let's see what Q2 thinks. But I mean, it looks like I don't know. We'll see. We'll see. It looks interesting, doesn't it? Looks like they left. I don't know if they're going to come back, right? Maybe they will, but this is interesting to see. This is why the data is good, right? Numbers don't lie, right? Now, speaking of United, the problem, so why am I talking about United? Well, it's bleeding the whole market, right? United has to stabilize in order for the other things to, the whole other MA market, the healthcare industry to stabilize. It's tearing down the Dow. The Dow, I don't think the Dow has hit an all-time high because the Dow is inside of the, United Healthcare is inside of the Dow. Dow Jones, there it is, the Dow Jones, right? Mike Jones, actually, maybe it has it hit all-time highs. Yeah, I mean, it touched it. I mean, it's done pretty well, to be honest with you, without, but it's not. It's still like it's not like the S&P 500, right? S&P X Jones. It's funny. Look, you see how like the S&P actually is up 2% from all-time highs. So that's interesting. Okay, so we talked about this. So what does this mean? If you go to the support and resistance lines on the monthly, on the 200-day, it looks like we may have some form of support right around, based off of just pure technicals, $210.22. Again, guys, just pure education here, okay? So it looks like, again, I hypothesize that I think it might come down here and maybe bounce, but if it breaks this, if it breaks this, then this might be the next one, 175 and then 878. So if it breaks this, then Lord have mercy. Lord have mercy on this company, right? And then I have a hard time believing that it'll break because look at the RSI. I mean, it's the RSI is touching right on that lower end of the oversold region at around 30. I mean, it's 30.36. So again, we'll see. We'll see what happens. Okay. Wife says I need more time with people versus stock terminal. I know we spend all our time on there, guys. It's, but you know what though? What does that say? What did we build together? We built something magnificent. Like, isn't this amazing? Right? I'm, sorry to all the wives out there, but you should hop in sometimes. It's pretty fun, right? Just don't go in the 18 and up channel, right? Don't go in there. Don't go in the political channel, right? Okay, so we talked about this. Okay, next. Oh, yes, I had to do this. So United Healthcare, UNH stock just taught a masterclass on how to lose half of your market cap before lunch. So what am I talking about? Well, I mean, guys, look, this thing is down. It used to be above $600, and then now that it's dropped over 60% in market cap. Billions of dollars has been lost. More than $250 billion of dollars has been lost. And I find it funny because everyone, United Healthcare's former CEO pulling Q1 guidance, this was his face. But then retail investors were like, they were so excited. But then now, this is retail investors. They have the same face as this guy after them realizing that the earnings per share is $16. Because remember, if you don't recall, United Healthcare back in Q4 2024, they guided that they're going to make $28 per share in 2025, but yet they just came out with they pulled their guidance and then they came out with their new guidance and it was $16 per share, way below their original 28. And now here are retail investors looking up at a sea that's about to basically land on top of their head, right? That's kind of scary, right? Now retail investors see the same pain as Mr. Andrew Whitty, right? Holy moly, 28 to 16. Holy moly, right? Now the question is, can they get back to their glory days? We shall see. We shall see. Also, shout out, look how sexy and sleek the stock terminal is. Just so beautiful. Look at just the beauty of the stock terminal, guys. The power of just being able to access stock market data at anywhere around the world, right? Okay. Next one here. A lot of folks now are starting to say, this is reminding me of Boeing. So let's talk about Boeing. Boeing is BA. What happened to Boeing? Boeing went up high, right? Back in 2019, Boeing was high, but then it fell. And right now you can draw a line here and draw a line here. If it breaks out of here, then it could go. But Boeing hasn't recovered. How many years? How long has it been? Since 2019, guys. So it's 2025 now, right? It's been 6 years and Boeing has not recovered. Okay. Now let's go ahead and let's talk about PayPal. People are starting to say, hey, this is starting to remind me of PayPal. Here's PayPal 2021. It's been for 46 years. Nope. It's been 4 years and PayPal has not recovered yet. Could this be the same or will it be a buying opportunity? I don't know. No one knows, right? But you could see now people are starting to see this. Institutions based off of this data have been selling. And it'll be interesting to see what they do in the next Q2 reporting scheme. Oh, it'll be interesting. Let's continue onward. So we talked about this. We talked about this. We talked about this. Oh, we talked about that. All right, good. So now I can go ahead and I can exit this and I could go in and go here. So then now what we're going to do is we're going to watch a couple of videos. Okay. This is 2 months ago. Deutsche Bank maintains a buy rating on United. Let me see here. It'll be interesting to see if they're actually buying. We'll be able to track this soon enough. It's actually interesting to see this. Let's see here. So don't you find this interesting? Let me show you something. So before we watch this video, you can see Deutsche Bank is saying it maintains a buy rating. So if that's the case, what do you see here? Here's Deutsche variable series. This is the same thing, right? Deutsche, right? Same thing, right? Deutsche here, Deutsche. What are they doing? What's happening to their own? What's happening? They've been selling. They have been selling. Deutsche has been selling. And guess what? The stock price has dropped. We're about to see the next earnings, the next report, and the next report's going to tell us, have they been buying? Have they increased their positions, or are they selling? Are you seeing this? They're saying it's a buy. We're going to watch the video now. But from the data, they've been selling. Now, here's the thing. From the 23,000 people that are watching this video, do you think any of them, sadly, do you think any of them know about this graph that unfortunately I can't click on anymore? Yeah. You think they know about this graph? Let's look at the comment sections. I don't know why it's not It's not letting me click on things anymore on this mouse. It's like this mouse is weird. That's fine. I'll just use this thing here. Someone just said, just bought a ton. This is how retail bozos lose money in the market. Buying when the stock are at highs, then selling when the stock is down. $400 by the end of year. Okay, we'll see. Now I'm suspicious. These idiots usually recommend selling. Maybe the hurt has not been priced in. Interesting. I would not buy UNH stock until after open enrollment. Ooh, this guy knows what he's talking about. This guy seems like an expert. Yeah, good job. Okay. Again, I'm not recommending buying or selling United. I'm just saying he's talked about open enrollment. That's pretty cool. Let me go ahead and just kind of replay this. I don't know. Let me just. For some reason, I have a problem with my thing here. I don't know why it's not. Give me a moment. Let me just restart this mouse here. Let me open up the mouse and let me just disconnect it for a sec. Yeah, the computer's tired, guys. I'm working this computer, you know. Looks like it had a stroke or something. Give it a second. Let's just reconnect it. Okay, good. So let's see. All right, we're back in business. Just needed to reconnect here. Okay, good. So let's stop the sharing of the screen so we can share the audio here. I just find it funny. They're saying it's a buy, but they're selling. Like, are you starting to see the pattern here? I mean, the pattern to me looks like it's pretty simple, right? I'm from like these, like, if let's pretend I'm like them. I'm from Wall Street. I'll say everything that I'm doing an opposite because I am a lying piece of shit, right? So anywho, let's continue with this here. And let's listen.
So joining us now is George Hill from Deutsche Bank. He has a buy rating on the stock. George, it's great to have you on, and let's start.
Wait, hold on. Before we start, this was on May 16, 2025. May 16, 2025. And that was when the stock was $291. Until then, the stock has dropped 18.55%. It's dropped $54. Okay. So let me just show you, because I have it on here. Let me just show you. So this video is on May 16. May 16 was here. So we could just see everyone's on the same page. Okay. He was saying it was a buy. However, it dropped. However, he was saying it was a buy while Deutsche was selling. Interesting. Let's see what they report next. We'll get this number in the next 3 weeks here, 4 weeks. Yeah. All right. Let's now listen to this now that we have this data.
Buy rating on the stock. George, it's great to have you on, and let's start right there because this has been painted this week as the collapse of America's largest health insurer, at least from a stock perspective. Why would you buy now?
So, Morgan, first, thanks for having me. And I think if you look at United's business, like United's business, broadly speaking, is pretty well managed. They've had a very difficult 2-year run in the Medicare Advantage business, both in the provider business and in the insurance business. They managed those two businesses a little bit separately. A lot of the headwinds in this business have been driven by the government providing lower payments to the insurer, as well as an increase in utilization that we've seen post-COVID. We think the company eventually moves past these headwinds, and this would seem to be an unusual time where the stock is trading at a valuation that's just, you don't often get the chance to buy United shares at 13 or 14 times earnings, given where the stock is historically traded. Simply speaking, we don't think the business is broken. We think these issues are manageable.
You know, it's interesting because you compare this, you use the analogy of General Electric, and I should say General Electric before it was spun out into 3 separate companies, which are now performing pretty well. But I was the reporter here at CNBC that was covering that implosion as it was happening over the course of years. So how are you comparing the two, and what are the lessons that we can learn from GE?
Yeah, it's an interesting question, and this, of course, kind of comes out of conversations with a lot of investors, and it's kind of the big if, right? Like, history doesn't repeat itself, but it rhymes. And as investors were kind of worried at, what I would call peak fear on United Healthcare shares, the conversations that I had with investors were like, remember what happened to GE? Remember when they lost the ability to manage earnings? Remember when the financial business unraveled? Remember when the insurance business unraveled? And they lost investor confidence, and the company couldn't ever get back its premium multiple that it had versus its peer group. It could never kind of put the businesses back together, especially the finance business post the financial crisis. So we just kind of called that out as a cautionary tale, because United's actions over the last several years have looked a lot like GE's through that period. A lot of acquisitions. United has really plunged headfirst into the risk business, both in Medicare Advantage and in care delivery. At this inflection point, it's really important for investors to dig in and do they understand what United's exposure is to these risk business? Do they understand the impact of these acquisitions?
So, George.
I'm sorry.
So, yeah, I mean, honestly, so George pretty much shut the hell up, right? George, shut up, George. You're saying that United Healthcare is a buy, right? But your institution is selling. Come on, George. Don't mess with me, George. Stop this bullshit, right? We live in an era now where we have access to technology. We have access to the stock terminal. We have access to data. Don't bullshit us, George, right? Save this Wall Street pre-2010 bullshit there, because we're going to call you out on your stupid shit. You piece of shit Wall Street turd, right? You piece of little shit, right? A lot of retail investors came in, right? And look where it is now, 290 down to 237. Come on, George. Piece of shit, right? All right, let's go ahead and continue.
Paint the optimistic picture for us then, because you talked about government having lower payments. I don't know that the government is looking to pay more anytime soon under the Trump administration. And then this increased utilization, people being sicker, I guess, even doing more outpatient. What is it demographically or adjustment-wise that United Health can do, especially under the broader cultural scrutiny that they face, to get ahead of that?
Yeah. So, John, the great news is we already have visibility to the higher payments. The government has already published what we call the rate notice for Medicare Advantage for the payment year of 2026. It's going to be up 5% and change. So after several years of flat rates, as utilization, to your point, continue to increase, United's going to get some relief next year as it relates to rates. The flip side, and this...
Yeah, and what about Clover? What about Clover? Oh, boy.
Is what we think has been the big issue. We're going to talk a lot about risk. Beginning in 2024, the government changed the risk model. It basically changed the way Medicare beneficiaries are measured for how risky they are, and they started kind of lopping off these codes. It looked like a reimbursement cut if you're a United Health group. The last year of the implementation of that is in 2026. You look back at the last several years, we've seen a big increase in utilization. Okay. We've seen a big increase in medical cost inflation. United should start to lap all of these things in 2027. So the blue sky.
Well, what quarter should investors expect to see the evidence this is happening?
I like this guy's face. This guy on the left, his face. This is like, we should take a screenshot and make this a meme. This is like how your wife looks at you when you know you fucked up, right? Right. This is how you this face right here, guys, this one right here. This is what Michelle gives me when I know I messed up, right? This guy is like, shut your little, ass up, right? So I'm going to go ahead and I'm going to post this in the, Discord here. Because I think this is kind of funny here, I'm putting the Clovetar channel, yeah, this is kind of funny here, yeah. So this is like how your wife looks at you, and you messed up, right? You messed up. He's giving that, boy, what in the world are you saying, right? And this lady, I remember, I'm flipping through this here. I remember this lady back in, a couple years ago. She was saying, I like Heinz brands. She literally said Heinz brands 3 times, right? which is HBI stock. Where's HBI stock now? $4. $4. Remember when she was saying Heinz Brands? Right here. Sorry, I missed it. She was saying Heinz Brands right here, right there, right when it was pumping, right? Heinz Brands. Oh, Heinz Brands. Right here, right? Right when it was going up, right? You can't believe in these people, right? These people are just Heinz Brands, right? They don't, right? This is how I look at them, right? Anywho, let's go back to what this guy's saying here. Let's go.
I would expect to see on the Q4 Analyst Day and Investor Day this year, the guidance around 26 look better. I'd expect Q1 26 results to start to look better.
Hey man, the guidance was for was it $16, man, for 2025. What do you think the guidance is going to be for 2026? You tell me, brother. You tell me.
And what we'll really be looking for is in January of 2026, the government will start to give us the look at what 2027 rates look like. That'll be like that'll tell us whether we keep being pointed in the right direction or whether we're going to start to head in the wrong direction.
Yeah, headed in the wrong direction. Looks like you're prepping for heading in the wrong direction based off of what you've been saying here, brother. All right, so let's go ahead and look at this one here. Okay, let's listen to this guy here. This guy, his name is Jim Cramer, for folks that don't know him. Okay.
All right, let's get to a mad dash. Got an opening bell less than 2 minutes from now.
Let's see.
We get started with a new week of trading. So exciting.
Yes.
Except if you're a shareholder of UNH, it has not been
Wait
exciting.
Wait a second.
And he's been a big proponent of UNH, right? He's like, wait a second. Let me think of some bullshit to say, right?
People sell things for many reasons, right? They get divorced. I don't know about that.
This is UNH at $304. And this was 2 months ago. May 19, right? What is UNH trading at now, guys? Let me remind you, $337, right? Down a lot. All right, let's continue.
They get, maybe something happens in their family. They need money. But David, why do they buy? Sometimes they buy because there's a bargain. Now, typically these insiders, maybe they buy like 1,500 shares. Well, how about if you bought your Stephen Hemsley, returning CEO, who acquired 86,000 shares at 288. That's pretty good, 25 mil.
Give me a 5-year chart, by the way, guys. 5 years, just to put this in perspective. Sorry, go ahead.
And then Christian Gill, director, bought 3,700 shares. Timothy Patrick, director, of 1,553. The CFO, come right in. The CFO's in there buying the heck out of it, too. 5 million.
Wait, the CFO? The CFO. He's talking. Wait a minute. Is it this CFO here? The CFO that got fired? The UnitedHealthcare replaced the CFO in another leadership shakeup right after they maybe heard about the DOJ investigation? That CFO? I smell some cockroaches. Okay, I smell some cockroaches here, guys. But let's listen to his bullshit. Maybe we might be able to learn more bullshit.
5 million. So I just say to myself, if they really knew, like the journal says, that they're being investigated criminally, that's a very big buy that would obviously go away.
No, without a doubt. I mean, I asked for the 5-year. 10-year still shows because it erased 5 years of gains in basically weeks.
Absolutely. But remember, it is a fine company. I don't think the franchise, unless it's indicted, is going to go away. So let's just say, when I saw this insider buying, I was convinced that maybe we're too negative.
All right, so that's enough BS from that. Okay, so he's saying on April 28, UnitedHealthcare was, the best insurance stock to buy, right? And then for Clover Health, he says, I don't want to hurt anybody, right? So on April 28, what was the stock price for United? April 28. What's going on, guys? April 20. Oh, Lord have mercy. April 28. It was $420. $420. Smoking freaking retail investors right into the downward spiral of being down 43.39%. That is a Jim Cramer effect right at you guys. Okay, now let me tell you something. Okay, so we already talked about this in regards to the data. So what has institutions been doing since Jim Cramer has been softening the blow on Wall Street? And we've talked about Jim Cramer in the past about market manipulation, right? So we'll investigate this right now, since this is going to be an all-encompassing live, because, you know, this is going to be the live that tells the truth, right? We're going to go to institutional investors here. Look at that. Let's see. Oh, number of shares. Why are they selling? If it's the best stock in the world, why is institutional investors going down? Right? Why is institutional investors going down? Look at that. Right? If it's the best stock, Jim, right? You called it out at $420 as the best stock. Why is it down? Why are institutions selling? And why is the stock down at $337? Okay, so let's continue, but let's go ahead now and go on to YouTube here, and let's type in Jim Cramer market manipulation. Is it this one? I don't know which one it is. I think it's this one. Let's listen to this one, guys. I'm going to speed it up
because it's the holiday period.
So we can listen to what he thinks.
Again, today we have...
This is Jim Cramer from like many, many years ago, and this is his BS.
The misdirection from the futures. The futures pointing to an up market, and as of right now, it's actually down again. Is this just because it's the holiday period that we're seeing this?
You know, a lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money.
So when he was short, he used to essentially do market manipulation.
Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher. And maybe commit $5 million in capital to do it, and I could affect it. What you're seeing now is it probably is bigger market. Now, maybe you need $10 million in capital to knock this stuff down, but it's a fun game and it's a lucrative game. And
it's a fun game. It's a lucrative game. This guy's not for you.
You can move it up and then fade it. That's what often creates a very negative feel. So let's say you take a long.
You can move up and fade it. You can move up and fade it. Does that sound familiar? Let me show you something. Let me show you something you guys already know. Okay. You can move up and fade it. Let's talk about this. Okay. You can move it up and fade it. What does that look like to you? What does that look like to you? And fade it. And fade it. Move it up and fade it. And fade it. What does this bullshit look like to you? Okay. Let's continue with the audio here. Okay, let's continue.
A longer term view intraday. And you say, listen, I'm going to boost the futures. And then when the real sellers come in, real market comes in, they're going to knock it down. It's going to create a negative view. That's a strategy very worth doing when you're valued on a day-to-day basis. And I would encourage anyone who's in the hedge fund game to do it because it's legal.
Right.
And
I would encourage everyone to do it because it's legal. For all the politicians out there, why are you letting this happen? Right?
It is a very quick way.
Look at this guy. This guy's like, oh, okay, well shit.
To make money and very satisfying.
Okay.
Yeah, very quickly to make money and very satisfying. And who are they taking money from? Retail investors. They're satisfied by it. They don't care about you.
Well, by the way, no one else in the world would ever admit that, but I do care.
That's right.
No one would ever admit that, but I don't care.
And you can say that here.
I'm not going to say it on TV.
Well, on a related note, there's so many more hedge funds today than when you were managing your hedge fund. Right. Do you think that does that exacerbate the moves, or does it make it tougher?
Well, you know, the hedge funds are positioned long short, okay, not just long like mutual funds. So it's really vital these next 6 days because of your payday. You've really got to control the market. You can't let it lift. When you get a research in motion, it's really important to use a lot of your firepower to knock that down because it's the fulcrum of the market today. So let's say I were short. What I would do is I would hit a lot of guys with RIM. Now you can't foment. That's a violation of
foment.
Yeah, you can't foment. You can't create yourself an impression that a stock's down. But you do it anyway because the SEC doesn't understand it.
So you can't do it. It's illegal, but you do it anyway because the SEC doesn't understand it. Jesus. Are you seeing that? And this is like a joke. What is a comedy show?
Create yourself an impression that a stock's down. But you do it anyway because the SEC doesn't understand it. So that's the only sense that I would say this is illegal. But a hedge fund that's not up a lot really has to do a lot now to save itself. So this is different from what I was talking about at the beginning where I would be buying the Qs and stuff. Right. This is actually just blatantly illegal. But when you have 6 days and your company may be in doubt because you're down, I think it's really important to foment, if I were one of these guys, foment an impression that research in motion isn't any good because research in motion is the key today. So, you would hit this guy and that guy when you would see an offering. When you see a guy who's bidding, you'd wipe out that guy very quickly. But what I used to do was called, if I wanted to go higher, I would take and bid. And if I wanted to go lower, I'd hit an offer. And I could get a stock like RIM for maybe, that might cost me 15, 20 million, Annie, to knock RIM down. But it would be fabulous because it would beleaguer all the moron longs who are also keying on research and motion. So we're seeing that.
So he's calling all of us moron longs. This is why I tell you, whoever tells you that they can use technical analysis to win every time, they have technical analysis skills, that they can technical analysis your way out of poverty, they're lying to you. They're scammers. Technical analysis cannot predict the market, right? Yes, you can have patterns and all this bullshit, right? But at the end of the day, long-term investing in companies that can generate future free cash flow, have upward trajectory of revenue, have a higher TAM, which we'll be talking about. What is a TAM, right? All part of lifetime access. By looking at companies like that and investing in the long run, you bypass people that are assholes like this that manipulate the market in the short term. The unfortunate part is retail investors focus on the short term, right? But you need it just like a doctor, like a medical student working hard, training every day with no end goal in sight, right? You have to be like that because it takes a long time for this to happen. Okay, let's go ahead and continue. Hazaifa, we may have to do a part 3. I would say it's probably better to maybe look at this potentially in the earnings for Clover. I think this will be pretty good to talk about. I think that'll be a good time to do it, right? Because then the options data will be open and we'll have more data, right? This is options data is kind of jacked right now from Friday. It's the weekend, right? So I think that'll probably be good. And again, it'll be from an educational perspective, right? In accordance to what we talked about earlier on in the video. Okay, so let's continue with this.
Again, when your company's in a survival mode, it's really important to defeat research and motion and get the Pisanis of the world and people talking about it as if there's something wrong with RIM. Then you would call the journal and you get the Bozo report on research and motion and you would feed that there's a Palm's got a killer it's going to give away. These are all the things you...
So you essentially, feed the journal fake news, right? So you can essentially get what you want, right? To lower the stock price.
Must do on a day like today. And if you're not doing it, maybe you shouldn't be in the game.
Okay. Another stock that a lot of people are focused on right now seems to be Apple.
Yeah, Apple's very important to spread the rumor that that both Verizon and AT&T have decided they don't like the phone. Right. It's a very easy one to do because it's also you want to spread the rumor that it's not going to be ready for Macworld. And this is very easy because the people who write about Apple want that story. And you can claim that it's credible because you spoke to someone at Apple because Apple isn't and it doesn't.
Right, they're not going to comment.
So you essentially lie that you spoke to Apple because they're not going to comment. And then you're able to basically fake news, and then the stock price goes down, and then you short the stock price, and you make money. This is how these people made money. And guess who? Guess who bought high and sold low? Retail investors, right? Your potential parents that got hit by this, right? Your parents that most likely probably lost their house in the great financial crisis is people like these assholes that have basically hurt the American dream.
So it's really an ideal short. And I would, again, if I were short Apple, I would be working very hard today to get that. And the way you would do that is you pick up the phone, you call 6 trading desks, and you say, listen, I just got the phone with my contact at Verizon. And he has already said, listen, we're a Lucky G house. We're a Samsung house. We're a Motorola house. There's no room for Apple. They want too much. We're not going to let them in. We're not going to let them do what they did to music. And, I think that's a very effective way to keep a stock down. Right. I might also, by the way, because the stock at 84, 85, a little bit of capital, you go buy some January 80 put.
He said that's a very effective way of keeping the stock down. I mean, are you seeing this, ladies and gentlemen, right?
That makes it look like there's going to be something going on. So maybe you give Morgan an order to buy 1,000 Jan 80 puts, then you go position limit with you use a firm that doesn't know what the heck it's doing. Maybe you go to UBS for puts, and you just kind of create an image that there's going to be news next week, and that's going to frighten everybody. Right. Then they all go out and say large put buyer UBS. And then they call Pisani again. You have to use those guys and say, listen, I see a big buyer puts, and I'm told that it's SAC. You would do that too. And these are all what's really going on under the market that you don't see.
Right. Nobody else talks about.
Right. But what's important when you're in that hedge fund mode is to not do anything remotely truthful. Because the truth.
So literally, what you're in the hedge fund mode, you can't do anything truthful, right? So what do we see about Deutsche Bank saying that United Healthcare is a buy? But I showed you equivocal proof that shows that they're selling. He just said that in the hedge fund business, you cannot do anything remotely close to the truth. So pretty much it's all bullshit, which is why I created a software platform that gives data. So I could use math to help me figure out what is bullshit and what is real, because these people are all full of hot lava shit. Let's listen to again what he said.
When you're in that hedge fund mode is to not do anything remotely truthful, because the truth is so against your view that it's important to create a new truth to develop a fiction. And the fiction is developed.
To develop a new truth, to develop a fiction. Wow.
by almost anybody who's down like 2% to up 6% here. You can't take any chances. You can't have the market up any more than it is if you're up 6, because starting Jan 2, you'll have all your money come out. So what would you do if you're in that situation and you feel like you're desperate? Is that you would do these actions?
So essentially what he's talking about in Jan 2 is when your hedge funds numbers are out and people see how much money you make, and then no one's going to want to invest in your hedge fund. So you try to short the market to essentially gain back your returns so you can say, look at how much money we made as a hedge fund. They do this as a desperate way, and what they're doing is they're taking money from retail investors. They go on CNBC. They have, again, the bottom 50%, work hard, 9 to 5, and then donate their W-2 income check money by buying high and selling low. Welcome to the era of the stock market. But guess what? Now we have an internet communication system where I'm able to talk to you from a first principles academic theoretical exercise using financial education as a vehicle to be able to take you from 0 to hero. So it's like you almost have a degree in business statistics and finance. This is the power of our platform.
Talking about the mechanics of the market.
Well, mechanics are much more important than fundamentals.
Oh, okay, well, but in terms of the fundamentals, you've been writing about how you think
about the fundamentals. Research in motion just blew out the court.
Right.
But look what people.
Who cares about fundamentals, right? Because research in motion and all this fomenting that he basically doesn't care about it, because in the short term, it doesn't matter. So when somebody tells you, this guy says it's going to be like this in the short term, they're lying to you. Nobody knows what the short term is because it's all manipulated. Benjamin Graham talked about this before. Charlie Munger talked about this before. The stock market in the short term is a weighing machine. In the long term, it is a voting machine. Wait, sorry, I reversed it. The stock market in the beginning is a voting machine. In the long term, it's a weighing machine, right? Fundamentals matter in the long term. You're going to get free cash flow. All that comes into effect, and all that adds on together to, the intrinsic value. Okay.
I mean, that's a fabulous thing. The great thing about the market is it has nothing to do with the actual stocks.
Right.
Now, look, over maybe 2 weeks from now.
You see what he said? There's something about the market has nothing to do with actual stocks. I mean, it's literally has nothing to do with the stock market. Listen what he says.
Fundamentals, you've been writing about how you think.
About the fundamentals. Research in motion just blew out the court.
Right.
But look what people can do. I mean, that's a fabulous thing. The great thing about the market is it has nothing to do with the actual stocks.
Right.
Now, look, over maybe 2 weeks from now, the buyers will come to their senses and realize that everything that they heard was a lie. But then again,
the buyers will come to their senses and realize everything they learned about was a lie.
And Fannie Mae lied about their earnings for $6 billion. So,
right,
it's just fiction and fiction and fiction. And I think it's important for people to recognize that the way that the market really works is to have that nexus of hit the brokerage houses with us.
Right. Clover Health is terrible. Clover Health is going to go bankrupt. And then all of a sudden now institutions are buying Clover. Right. Let me show you. Right. We have the proof here. Right. This is proof. This is equivocal proof. I mean, you cannot deny this proof. You go to Clove. Right. Use the data. If you guys want access to this data, there's a link down below. Look at the proof. Look at the 25, look at the proof. Investor holdings, sell. They dropped it, and all of a sudden, boom, they bought. What do they do? The put call ratio? It's let me go ahead and look it up again here. The put call ratio was high, and then all of a sudden it started to stabilize. Look at that. And now in total invested, it's going up. Institutional ownership's going up. Look at that. Look at investor holdings. Right? Oh, it's a bad stock, right? And all of a sudden, boom, just like that. Right? Let's go back.
With a series of orders that can push it down and leak it to the press, and then get it on CNBC. That's also very important. And then you have a kind of a vicious cycle down.
Right.
And it's a pretty good game. And it can be played. You can pay for 1% or 2.
Right. And then you get long before Macworld and the expectation that the iPhone is going to be good. Right. And then you go back
you
to the
certainly
long
got to
side.
use the other side.
Interesting.
And there's a case where I would say the January 80 puts can be justified because after I've knocked the stock down to 80, I can buy a lot of common. And then you play it right into Macworld where they'll probably.
You see that? So you drop down the stock, right? Then buy a lot of common. Common what? Common shares, right? Common Class A shares. That's what he means, right? So essentially drop the stock down, make money on the way down, make fake rumors, be a liar, have retail investors buy high, sell low. Once they sell low, I buy back common shares, I buy back the stock, then I do what? Covered calls maybe, and then be able to make money on the upside. Done.
Introduce the phone and Verizon's going to take it.
Okay. Well, maybe the fundamentals don't matter, but let's talk about the Fed.
Remember, what Wall Street Confidential is not giving you the party line. Oh, here's the party line, by the way. I spoke to Apple on the phone. I hear the phones are good, and Verizon might take it. And as a matter of fact, the research in motion sellers, I don't think they know what they're talking about.
But you've been writing about the cell phone market. You think you don't want to be involved in that.
The problem with the cell phone market, frankly, is that these guys are all killing each other.
Right.
Someone has to take a dive. Motorola and Nokia have to get in a room and just fix price. They've been reluctant to do that because of the various justice departments and because they
it's illegal, right? Yeah.
Whoa. That hasn't stopped a lot of other companies.
This
seems to be a case where they seem to be directly worried about the authorities. It's almost as if they have a lawyer that matters, like say the Bristol Myers lawyers. And what eventually happens is the shareholders demand that you get phony lawyers and you sit in a room. And it'll happen soon.
Real quick, the Fed, the numbers out today weaker than expected.
Oh, so what? The Fed has obviously got cut. But again, you call the various guys who cover the bonds and you say ignore the bond action. What's really happened is the Fed is very frightened about. And then
Again, you see this, it's all about the, Federal Reserve, two-year Treasury, which we talked about in the beginning of the video. As you can see, this is why when I tell you we are an actual educational platform, you see how much we are learning in this hour and 47 minutes and then 2 hours yesterday. You see how much education that we're putting out there into the community for the people to see, right? This is the power of the platform, okay?
Up the number that they're really frightened about. The Fed is actually desperate to try to figure out, how quickly they have to cut without looking like dopes that they raised.
Right, because they've been talking about they're worried about inflation, all this.
You don't want to raise in May and then cut in January. You look like Mexico, for heaven's sake. I mean, this is like a distinguished group of people who went to really good schools.
Right, these are smart guys. Absolutely.
Yeah, they don't want to look like dopes.
When we were talking earlier in the week, you said you think it'd be some sort of crisis, possibly Ford being a trigger.
Well, Ford went and did all that. They pledged all this investment banking to all these guys. So now that they're very reluctant to say negative things, it makes it much tougher for the Ford story to play out. I mean, the amount of business that Ford has to do. Ford may be the big client of 2007. So if I were in the corporate finance room, I would say, listen to the research guy. I said, listen, I spoke with Mullally. I actually have the inside. The plan works. So then the research guy and say, oh, man, what do I do? It's bonus time. I'm not going to be a total idiot. The Spitzer's going to Albany. Let's get back in the game.
Right.
I think that's important.
Is it possible? Because a year ago, this time, a lot of people are saying GM's about to go bankrupt, and of course, the stock's up 50-some-odd%.
Well,
they're
GM. No, but GM, the difference between Ford and GM was the GM's balance sheet was never really, it turns out, wasn't that bad. Ford's balance sheet's pathetic. And you know that because they're willing to screw over the common for the bonds.
Right.
That's kind of, if it weren't Ford, if this were Qualcomm, we'd be saying Qualcomm's desperate, but no, it's Ford.
But it's Ford. It's an American icon.
I drove a Ford. I owned a Ford once.
And this is our country. Well,
right.
Been Jim Cramer.
Again, what I'm trying to go for in the Wall Street Confidential, and I'm not saying you're sending it. I have to talk about what it's like at my hedge fund, okay? And what other hedge funds do. Because the difference is that if this is an intraday show, and you need to know what I know is going on. Now, we step back. Research in Motion was a real blowout quarter. It was a really good quarter.
Think about it. CNBC has to be nice to these hedge funds because they're the ones that come on and talk their bullshit. And they're the ones that get views. And retail investors don't know between good and bad. So they come on and listen to these folks and they end up getting screwed over. It's unfortunate. It is what it is. All right. Let's go ahead quickly. Let's go ahead and share this screen real quick. And let's look at algo flow. Interestingly, algo flow for Clover just turned negative. So that'll be interesting to see here. It just turned negative. We'll see. Earnings is on Tuesday, so we'll figure out what happened there. The problem is when it comes to earnings, if you go ahead and take a look at alignment, we're going to make, I guess we have to make a part 3, sadly. A part 3 is coming. We have to make a part 3, guys, right? So a part 3, we're going to be talking about alignment earnings report because alignment reported this week and it shot up over 40%, right? But then all of a sudden it dropped down 17.49%. So what happened, right? It's only up 10% since earnings. And that's because UnitedHealth is bleeding, right? Even Humana had a really good earnings. It shot up and it quite stabilized, but still, right? So again, what is that going to leave room for Clover? I don't know. But if you look at it right now from the perspective of, a short interest and look at Ortex here, you can see from the short interest in the past, about 3 months, we're actually up 229% on the short for Clover. In fact, 3 months ago when the stock price was high, short interest was only around 3, which is quite interesting. If you ask me, let me go ahead and just kind of put this back into perspective here. So short interest used to be 3 because shorts didn't want anything to do with Clover. But in the past, let's say 2 weeks, short interest actually has been dropping from 12.4% down to 10.44%. Why? Why is short interest been dropping? Why are short interest shares being dropped? Why is the days to cover being dropped? Why? Because earnings, because these short folks, so a lot of them are smart. They know that most likely they're going to report, positive quarterly second results here. They're not idiots. They see one of the analysts talking about 3 cents earnings per share, right? So they know this is coming, right? So that's why they're positioning themselves. So it's allowed to basically spike up, not to aggressively, and then they'll be able to short it back down because of UnitedHealthcare. That's why I'm looking at UnitedHealthcare. Hopefully, hopefully being able to be able to, on the monthly chart here, being able to bounce on this. That's what I'm looking at right now. Again, not financial advice, just, my hypothesis, an educational perspective for folks out there that want access to the softwares that we're using, such as the financial data analytics, metrics charts, et cetera, et cetera. This is the platform to be in, right? It's one of the best educational platforms out there. Take advantage, use coupon code SAS, right? $1,200 off. All right, let's go ahead and continue chucking along. Let me just make sure. We are good to go. So now let's go ahead and watch this lady here in regards to United Healthcare. This was now more recent. This was on July 24, 2025. What was United Healthcare on July 24? United Healthcare was $278. It is now dropped $40.81 since the creation of this video, and which is a 14.65% drop. So now let's listen to what they said when it was trading in the 270s. Let's see what they say. Let's go ahead and let's go ahead.
Strategist Jared Holes joins us here on set. Jared, always good to see you.
You too. Thanks.
It's feasible that the company did not know at the time of those media reports, correct? And as I understand it, the company proactively reached out to the DOJ to figure out whether or not there were any probes.
That's what it sounds like. I mean, none of us work for the company. We don't exactly know what happened, since the Wall Street Journal article came out. But, we basically have to go on what the company is saying, which is to say at the time they didn't know. Now that communication has been made.
So they didn't know. They went ahead, talked to the DOJ. They realized they're being investigated, and all of a sudden they fire their CFO. That's kind of weird. That smells like cockroaches, right? And you got Bill Ackman on their neck too.
Official to them in some capacity, and they're working through it. So today was kind of like new news, but not new news. Right. I mean, I think most investors thought something was probably happening behind the scenes.
What is the bull case for United Health? Is there a bull case here?
I think just time is the bull case. Is that
time?
And
it's an indefinite amount of time.
Right.
That's not a very good case.
I think
you see, that's the thing. Time, right? How long? 2026, 2027, right? First, a lot of these people that were talking heads were screaming, buy, right? Heinz brands, right? And all of a sudden now you basically start seeing institutional investors selling. You got Deutsche Bank coming on 2-3 months ago saying buy. But from what it looks like from their SEC 13F filings, and I'm happy that we have those filings, right? Imagine in the future they want to take those filings away from us. I will literally fight tooth and nail. I will donate millions of dollars to politicians to make sure that they don't take those SEC 13F filings, those sons of bitches, right? So let me tell you something, okay? They're saying all this buy, right? Buy, right? And now all of a sudden they're saying time, right? So pretty much they want retail investors that have pretty much bought and held the bag at $300. Now it's at $232. They want those retail investors to hold the bag, right? They want them to hold the bag for us as we make money in other sectors. And then later we'll take it back. And what's going to end up happening is retail investors are going to get tired. They're going to see all the other stocks go up and they're going to say, why me? Right? And that's how it works. And then by the time the stock is almost about to go up, they sell. And then all of a sudden the stock goes up if it's successful and it doesn't end up like Boeing or PayPal. Let's continue.
You just have to have a long-term oriented investment philosophy. And if you want to own the stock today, you're not making a bet that things change tomorrow, next quarter, even 2026 may not be a great year, but that most of
2026 may not be a great year.
The bad news is happening now, and they will work through it. And this will be a better earnings story, through the, end of the decade.
Pre-COVID at one point.
End of the decade is like 2029, 2030. Okay. That's, wow.
The stock was trading at 13 times, which was historically low for UNH. And then it got to the multiple that made sense. Now, the world's changed. 11 times-ish. They report on the 29th of July. Given what you just said about long-term, does that even matter at this point?
Well, I don't know if 11 times is the right number, because I think the street number now is clearly going to come down. All the messaging from the company and from the sell side, these analysts that cover the stock, is that the number is going to be probably south of $20 for this year, maybe a little bit north of 20 for next year. So if it's 18 to 20, which I think is where most people are shaking out, let's assume that's ballpark correct. And next year in the low 20s, you're still looking at a 15, 16, 17 times story, which for this company or this stock at this point in time, I don't think screens cheap to investors.
For this group specifically, what is the biggest question mark? Is it medical loss ratios and whether or not they get much worse? I mean, I'm just trying to figure out, obviously this group keeps trading down on the same news.
Right. I think the question is, what is continuing to be the driving factor?
So what is it? Medical cost ratio? Okay. All right. You got some knowledge. Let's see what you got.
Behind higher utilization, because it doesn't seem to be what we've all kind of assumed it to be, which is to say orthopedic procedures or cardiovascular. Maybe it's cancer treatments, because we
don't know what it is. Is it fraud? Why is their business not working? Is Optum not able to basically be able to update for V28, and they're just basically having to rewrite the whole system and bring coders? Why did Mrs. Vicky Berner leave Optum as the vice president to go in and lead to lead Counterpart Health, a subsidiary of Clover Health? What's happening right now? Are we seeing disruption right in between our eyes?
Talk about how many, advancements there have been there, and patients are taking chemo and IO plus other therapies. Maybe it's, pharmaceuticals that are doing it. We don't really know. We don't know what populations are kind of susceptible at any given time. First it was commercial, now it's Medicare and Medicaid. I think there are a lot of variables to kind of figure out here.
So separate from this, but sort of related, is that you had put out a note, has healthcare hit bottom? And you said that a lot of investors were asking that question now, not necessarily of this subsector of the space, but healthcare like pharmaceuticals, et cetera.
Right.
And your answer is what to them? Yes or no?
I don't think so.
Yeah.
I think that certain pockets are. I think we've seen some massive moves in tools and CROs. I mean, the MedPace this week up 50% at one point. Icon had a really good day. Thermo Fisher has had a good day. But these are stocks that are coming off of multi-year lows and are basically telling investors that they think that the first quarter was likely the worst quarter of the year, and things are getting subsequently better and maybe kind of in line with last year, but not demonstratively better. We can say these things are off to the races. But again, the market cap in this sector is managed care, which we're talking about now, and large cap pharma. You need those two sectors to outperform in order for healthcare to really get momentum.
And that's pretty much what's happening right now, right? So people need to wait for managed care and all that to basically be able. That's why I'm watching. Like I told you, I'm watching the technical analysis on UnitedHealthcare to see where it stabilizes and if it stabilizes there, and we shall see. Let's go ahead and watch this bad boy now here.
Talk about some committee.
This lady's hilarious. Her facial expressions are funny. He pushes hard on it. Let's go. They're starting to realize that retail investors are getting fed up. They're starting to realize that, hey, you know what? Stephanie, just give it up on this one, right? So let's listen to Stephanie here.
Stocks today we're going to talk about some committee stocks today that are falling pretty sharply. I've got a number in front of me. We're going to start with UnitedHealth. They missed. They say their earnings are going to be worse than expected. Stephanie Link owns this.
This was at $267. Now United is at $237, right? And look at this. And by the way, she said it was a buy when it was up in the 300s. Okay, let's continue.
Stock. What do you think?
It wasn't about the quarter. It was about the guidance. 2025 at $16 was lower than kind of worst case scenario. I thought it was going to be something like $18. So that's obviously disappointing. But you have a new CEO, and I think he's kitchen sinking the numbers for this year and then the recovery into next year. But I think the realization that this is a 2026 turnaround story is the reality at this point. I had always expected 2026 to be the turn, not 2025. We already knew all this bad.
I always accepted it. Oh, you see the reality daunting on her eyes. She's going to be the next Stephen West.
News. That's the reason the stock's down 40%.
They've been kitchen sinking, garbage disposaling, dishwasher.
Well, it's not been pretty, for sure. It's not been good. This is not one of the reports where I say it's a buying opportunity right today. I do think for the long term, but you have to have a 2-year time horizon at this point.
Wait.
But
you think retail investors have a 2-year timeline, right? They're going to end up basically holding, then end up selling at the last minute before institutions come back in. If UnitedHealthcare is able to showcase their incredible earnings per share that they had in the past.
You have a CEO who is a new CEO who's proven, who was behind Optum and the success of Optum for 10 years as this company. Mm-hmm. He left, so he's the executive chairman. New guy comes in, was a disaster. Now he's back, and it's just going to take time. They got to reprice Medicare Advantage. That's the whole key, and that happens next year.
You say it's not a buying opportunity today, but you had been buying when the stock had pulled back on other news. So what's the difference between then and now?
Well, I just think that it's going to take a little more time, and I'll look for better opportunities, or maybe this is the opportunity.
I look for other opportunities. Oh, looks like Wall Street may be moving on. Maybe they're selling to retail investors. Oh, is that what's happening right now?
I don't know, but there's no rush is my point, because you have a CEO who is being extremely conservative, rightfully so.
There's no rush. A lot of people thought UnitedHealthcare was a defensive stock, right? It's a great to retire off a stock, right? What do you think is going to happen to their dividends? Are they going to slash their dividends because of this? What happens if they do that? If they slash their dividends, like what's their payout ratio? Let me double check right now. Let me look at their payout ratio, because that's a good way to figure out if it's a high payout ratio. It's not going to be good. Let's see. Payout ratio is holy moly. Let me show you this big bowly. Okay. So payout ratio, guys, again, this is part of the lifetime access. So you guys need to learn what this means. So it's good for the educational side of things here. So the payout ratio, let's show you here what this is. Let me I took a screenshot from the terminal. Payout ratio now is went from 30% to 52%, and then the last earnings report in Q2 went up to 58%. So let's go ahead and just, from an educational perspective, because you need access to the data, let's go ahead and just ask it right now. So what's payout ratio relative to dividends, and what's a good range? And if a company goes from 30% to and let me look at Q2. Yeah, Q2. Let me give you an updated screenshot. Okay. Here's Q2. Look at the payout ratio right here. Payout ratio is 58%. So now let's go here. 58%. What does that mean? And is that sustainable? And what's the probability that they're going to cut their dividends? Please explain this in less than 3 sentences. So we use the data. Let's see. So a payout ratio is the percentage of the company's earnings paid out as dividends. So 30% means that 70% to reinvest, while 58% means they're paying out more than before. A good range depends on industry, but generally 30 to 60% is considered healthy and sustainable. If the company jumps from 30% to 58%, it could signal confidence or slowing earnings growth, suggesting depends on stable profits. So it's actually, but a sudden rise raises the risk of future dividend cuts. So what happens if UnitedHealthcare cuts their dividends, guys? What do you think is going to happen to the stock price, right? It's going to go down, right? Again, not financial advice. I'm just giving you from the examples of what I've seen what happened. Like, for example, in 2020, Energy Transfer cut their dividend. Stock went down to $3.95, right? But if you were to do some fundamental analysis and the folks that took advantage of that, now they're making 30, 40% per year off of dividends because they brought it back. Now, what's Humana's dividends, right? Humana's payout ratio is 19% in the most recent quarter. And if you look at annual right now, and their payout ratio is 35%. So there's something wrong. There is something wrong. Look at Humana. Humana is 35%. And then the quarterly, let me show you. The quarterly payout ratio is 19%. Again, we haven't talked about this, guys, because we don't talk about dividend stocks. But again, given that I've been in the market for over 14 years, I've seen a lot of these things. Again, this is an educational platform. Nothing about financial advice is here. It's just we like to teach. Okay, we love to teach. So you could see Humana from a perspective of payout ratio is 35%. But if you look at United right now, United's payout ratio is what? 52%. You can see it jumped from 30% to 52%. And if you go ahead here, look at payout ratio and graph this, you can see the payout ratio literally spiked. That means more than 52%. In fact, look at the payout ratio now for used to be 30%. Look at the payout ratio now on the quarterly basis. Look at it. It literally spiked up to 58%. Ladies and gentlemen, this is not good. And this has a high probability that this might actually, they might cut rates. Who knows? They might. So let me look at it here. Are there any news articles online that suggest that UnitedHealthcare may be cutting their dividends? Can you search? I'm curious to see if there's anyone who caught on this, right? So I didn't find any credible sources of analysts reporting that they might do that. So it's unfortunate, right? No one's reporting it, but they might do it. You never know. They might cut rates. Again, they're going to try to keep it. But again, interest rates are high, so it's hard to use the money to borrow. So you see how they're stuck between a rock and a hard place? You see this situation, and unfortunately, retail investors are not looking at this and looking at it from a first principles perspective and utilizing education from fundamental education, looking at the payout ratio to, be able to have a more holistic understanding of the equity markets, right? So now that we talked about this, let's go back to this lady and let's listen more.
So, but it's going to at least take another quarter or two for that to prove itself out.
Okay, show me Merck, please.
And the unfortunate part here, a lot of people don't have access to this data. So if you're out there and you want to go ahead and take the next step, join our platform. It is the best educational platform that's out there when it comes. Obviously, I'm biased, right? It's out there for stock market education, right? Talk to our lifetime members. We want smart people. We want people that are new, medium, or advanced. Join our educational platform and be part of us with Lifetime. So essentially, we'll be able to grow together, okay? Let's go ahead.
Because they missed. They planned $3 billion in cost cuts by the end of 27. They narrowed their full-year outlook. The stock is down 3 1/3%. Kevin Simpson owns the name. Do talk to me.
Also not as bad as feared. I mean, this could have been far worse. We rotated out of UnitedHealthcare into Merck. So this is our name along with Amgen in the healthcare space. I love the proactivity of the $3 billion in price cuts or savings or whatever you want to call it, because we know what's going to happen with.
So now they switched to Merck. Okay, let's move on now. Let's move on and listen to this. Let's exit this. Now let's listen to this.
Joining us is Jared Holtz. He is healthcare sector strategist. Mizuho, Jared, there's a tariff angle on pharma.
By the way, very quickly, this was
I'm gonna
posted
get
5
to that
days
in a
ago
second.
on July 28.
Joining us is Jared Holtz. He is healthcare sector strategist. Mizuho, Jared, there's a tariff angle on pharma. I'm going to get to that in a second. What do you and your team need to hear, want to hear from UnitedHealth tomorrow about a company that a lot of people have a lot of very strong opinions over right now?
Yeah, Brian, this is a big one tomorrow. I think, the street is just trying to come to terms with how the next kind of
And by the way, look at the stock price. United Healthcare was trading at $280. Now what is it trading at? $237. It dropped a lot, guys, right? And that's just a day before earnings, it looks like.
12, 18 months are going to play out. Not so sure that 2025 is necessarily even the focus anymore. I think for tomorrow.
They're saying this is what they're estimating Q2. So they're estimating Q2 of $4.48 of earnings, right? So guess what they basically did? We have access to it. We don't need to look at it. So $4.48. So let's look at what they actually reported. You look at earnings through our proprietary stock terminal, $3.74 of earnings. Holy moly. So the street wanted $4.48. They gave $3.74. A complete difference. Okay. Let's continue.
Tomorrow, we're likely to get a reintroduction of guidance from this company, new CEO coming on board. A lot of firms have written about it. We have extensively in research and otherwise as well. Maybe an $18 to $20 earnings range is good enough for the balance of this year or fiscal 25. But it's really about what the commentary is around next year and over the medium term, just given all the damage that's been done here.
$18 to $20 in earnings. That's a pretty big spread, Jared.
$18 to $20 in earnings, guys. They actually did $16, even worse than what these talking heads said.
It's really big, and it's also well below. I mean, I think coming into this year, the expectations were closer to the high 20s for United. And so we're all trying to just figure out what the trough earnings number is going to be. Is it indeed going?
And could it be 16 earnings per share that they said independently lower, and they're going to score higher? Well, I don't know, but we'll see.
Going to be this year. And then there's going to be a lot of price discovery associated with it. What's the multiple that investors are going to put on that number? What are they going to put on 26, 27, so on and so forth? So that's really the game that we're kind of playing now.
All right, let's talk about pharmaceuticals outside of managed care, health insurers, et cetera, because there is a tariff angle to big pharma. In fact, we have a soundbite. President Trump actually commenting about tariffs and pharma today, I believe it was. Listen in.
Well, we'll be announcing on pharmaceuticals sometime in the very near future. We have a very big plan on pharmaceuticals. We want to bring a lot of the pharmaceuticals back to America, where they should be.
So, Jared, do you have an idea of what that might mean? What are we thinking might happen from Washington with big pharma?
Yeah, I think the street is sort of bracing for, anywhere between a 15, 20, 25% tariff rate across the board for large cap pharma. This has sort of been the range that's been discussed over the past month or two. We've heard.
Again, that's enough right there. Let's go ahead now and let's listen to Ms. Bertha Coombs here. Let's go ahead and respond to this right now.
For the health insurers, they're weathering a perfect storm. It's really for the health insurers. They're weathering a perfect storm of higher costs across all of their government health plans. When it comes to Medicare, UnitedHealth is at the eye of that storm. In mid-May, CEO Andrew Whitty stepped down, the company withdrew guidance, and Chairman Steve Hensley was reinstated as chief executive, vowing to earn back investor trust and confidence. The crux of the problem, collapsing profits in the company's Medicare Advantage program. Insurers and doctors used to be able to add a general diagnosis, like an overall heart condition, to bill for higher reimbursement, like adding a little extra shot of espresso to your for extra margins. Under new rules known as V28, billing codes have been tightened up, so less caffeine for those margins. Along with United's insurance profits, that's
so. And the big thing here is counterpart with Clover, right? They've been able to essentially adapt to these V28 rules by doing like a Tesla up-to-date software, being able to navigate the insurance market while all these other insurers or insurance companies are getting slammed. right? And then you're starting to see this play out with Humana with a potential linkage with Clover counterpart subsidiary, that they're going to undergo a digital transformation to a point where they might even offset UnitedHealth Care.
Now hitting Optum Health, its army of 90,000 doctors, because it's making it harder to reap that extra margin with extra codes. Tomorrow, investors want to hear how the company is going to statch the losses and turn things around. And one big measure of that is going to be 2025 guidance. Analyst estimates.
You see, the big guidance is going to be 2025 guidance. But you know what? They're saying anywhere between, they're saying estimation guidance of $21. But what did we say in part one of yesterday's video and also today? They did $16 of earnings per share, right? Which is way below, right? And that's not good, which is why the stock was down.
Range from $18 to $26 a share for the full year, with consensus at nearly $21. Mizuho's Ann Hines says anything less than $18 is going to be a big problem. Billing practices are also at the center of the DOJ probe, which the company did acknowledge.
Again, big problem, and you can see what happened to the stock price.
Last week. You can read more in my UnitedHealth earnings preview on CNBC.com.
Right.
A lot of headwinds.
We're going to have to definitely read that. So I do have to say, Bertha, you listed a number of headwinds and issues for this company. Do we think we're at basically a floor? Is there anything else that can really go wrong, or anything else that's pending that could also impact this business?
That is the issue. I mean, but this is at the core. Basically, their doctor unit, Optum Health, was always sort of their secret sauce that made it better for them in terms of their performance in Medicare Advantage and everybody else. Now that is a big anchor and a big drag. One of the things everybody's trying to figure out is how they kind of missed the boat. We're in the second year.
So you could see basically Optum now is starting to be very bad, to a point where Vicky Berner from, had a vice president position of Optum, now moved to Counterpart Health, a subsidiary of Clover Health. What's going on here? Are we starting to attract the talent of other folks from United? Is United folks jumping ship?
Of this V28, all of their competitors had problems last year, so they cut back, didn't offer as generous benefits, and UnitedHealth inherited a lot of their patients. So we're going to see whether they are ready to turn this so that they don't have this problem again next year.
By the way, one of the bigger components in the Dow as well, weighing on the Dow, it's very surprising actually. The Dow so close to a new record high, considering a stock of this size actually.
But it's a 1,400 point drag this year.
All right, so we got this right now. Let's move on to this one here, and let's react to this one.
So where does America's largest health insurer go from here? Joining us now is John Ransom. He is Director of Healthcare Research at Raymond James. And here on set, Jeff Jonas, Portfolio Manager at Gabelli, managing their healthcare and wellness trust. And I assume, Jeff, because you're here, you are an owner of UNH?
We do.
And you're a believer in the company long-term. How come?
I think they can turn this around. They get to reprice the majority of their insurance here at the end of the year. And they have a great franchise that's very diversified across a lot of different lines of business. So even though some of the government businesses are underperforming right now, they still have a great commercial franchise and still have a great Optum business that does some of the providers and service offerings.
Well, yeah, I don't know if we can ask John a question. John, yeah, there you are. So John Ransom, let's talk about it, because there is a thought, and I know, Kelly, you had Bill Smead on your show yesterday.
Yes.
He was bullish on the stock as well.
He's sort of saying, look, how much worse can it get? This is a highly important company to the whole country, right? I mean, their membership rivals that of government health programs. So at some point, the government will.
So was Intel at one point. So John Ransom, what do you think? Can it get worse?
Well, look, you guys were talking about Britney Spears and Monsters and Field of Dreams. That was a lot more fun. Just wanted to say that. So to feel like the Grim Reaper here. So on United, there are just cheaper ways to play the recovery in Medicare Advantage. Humana, if you believe their out-year numbers, is about a 6 PE. CVS is kind of about an 8 PE if you believe in the recovery. The problem with United is, even if they can claw all the way back to, say, $30 a share of earnings in a couple of 3 years, the stock's, 30-40% more expensive than similar stories out there. So there's a lot of cheap health insurers out there. United, even though the stock's down a lot.
Yeah, so you could basically see here, a lot of folks now are starting to exit and head and run for the doors when it comes with United Healthcare. So definitely interesting to see, to say the least. There's a lot There's a lot of stuff happening right now. It's unfortunate seeing this play out, because a lot of retail investors now are pretty much stuck. So let's go ahead and share the screen now. And so we talked about a lot of these things here. We talked about these things, and now the goal is to essentially be able to make sure we hit every little topic that we wanted to do. So I think that's it, guys. We went ahead and talked about this, and the next thing now would be Alignment Healthcare, right? So, yes. So that's pretty much it, guys. Yeah, we're going to do an analysis on United, on Alignment Healthcare. Alignment Healthcare really quickly went ahead and posted a positive quarterly earnings for the first time. We'll talk about that, right? They did 15.67 million, earnings per share of 8 cents. This is the first time they've reported a profitable quarter, from my understanding. They had one here in early 2020, but it's been negative since 2020. In fact, what was the stock price of Alignment in 2020? Look at the price here. Alignment wasn't traded. It wasn't publicly traded in 2020. So really, this was before they were publicly traded. So it's always been negative for Alignment Healthcare. And for the first time ever, we finally have a GAAP profitability of 15.67 million. The goal now is to see, is this going to continue, or is this just kind of a one quarter like Clover, and next year they're going to be full year profitable? So this will be interesting to see. I'm very excited, and we'll go deeper in terms of Alignment and CLOV and the numbers in regards to the analysis that we did here. Now, folks, if you're out there and you essentially want to learn more about the stock market from a educational standpoint, powered by data, in which we offer from our proprietary stock terminal, you know exactly where to find us. Shout out to the 373 people on Twitter and 72 people on YouTube, for a total of 445 people. That's how much people are watching us right now, 445. That's pretty impressive, given that we, it's on a Saturday, right? And the stock market's closed tomorrow. So very good to see this. So thank you all for supporting the channel. Appreciate you all. And for folks out there, if you want a place that has no bullshit, straight education, straight knowledge, wrapped around by over 2.5 billion outputs of institutionally graded data, you know exactly where to find us. alstocktrades.com. Use coupon code SAS in the link below. Bet time for sure. Appreciate you guys. Love you all. And I'll see you on the next one.